Okay, in the interest of time, let's get things going. Cool. So welcome everyone. My name is Robbie. I'm with ERP Fixers, and joined with me today is Mr. Orpheus Birch. And today's topic is going to be about boosting financial consolidation with group reporting in S/4HANA. Just some quick notes. If you guys have any questions, comments, concerns, leave them in the chat box below, and we will get back to you at the end of the webcast. If we run out of time, then we'll be sending over an email with updates to all of your questions. So yeah, let's blast off and have a great session. So before we get started, a quick FYI about ERP Fixers, in case you haven't heard about us, is that we connect you with SAP experts, and our goal is to give you quality solutions for your SAP systems. ERP Fixers, it consists of a team of dedicated experts, SAP freelancers, and people known all around the space and area for specific modules. And some of our more popular offerings consist of online platform SAP optimization assessments, material ledger, S/4HANA transitional roadmap, and then cost transparency reports. We also go beyond that as well. So we like to work with your custom problems to try and find a long-term solution. So if you have any questions about that, feel free to head over to our website and fill out our contact page, and we can't wait to speak with you. I'm going to leave a comment and pin it in the chat section in case you're interested. And beyond that, let's jump into the session. Cool. So, like I said, we're joined with Orpheus Birch. Thank you so much for joining us. Um, so a little bit about Orpheus is he's a senior SAP S/4HANA financial group and reporting solutions architect. Orpheus has 20 years of experience in implementing SAP finance solutions across various industries. And beyond that, he's also a thought leader in financial transformation, and he's led multiple movements around SAP projects across sectors, such as manufacturing and the public sector. Mr. Birch is also an expert in consolidation products, including EC-CS, SEM-BCS, BPC, and group reporting. And he's also successfully managed multiple products and projects around the SAP group reporting space. So again, Orpheus, thank you so much for joining us. I'll let you take the stand.
Thank you, Robbie. Welcome, everyone. Good afternoon, and thank you for joining. It's my pleasure having you guys. Well, and today we're going to look at a number of topics, and what I'm trying to do today is to have everyone in the audience walk away with an understanding on the following topics: group reporting preparation ledger, and we'll look at consolidation master data model, master data concepts, and data flow, so as to give you a basic understanding of what group reporting consolidation is all about. I know some of you in the audience are not accounting specialists per se, but I try to do my best to dumb it down, so to speak, and make it simple so you guys can understand with the business knowledge and not to focus so much on the technical component of the product. I'll look at the difference between classic accounting integration and accounting integration with SAP new component in the new release of group reporting. It's called Group Preparation Ledger. And we're also going to look at intercompany matching and reconciliation, which is a key component in S/4HANA in of itself, but not necessarily a core component of group reporting. And then finally, I'll walk through some key design decisions and lessons learned from prior implementations for those who in the audience who have not yet implemented group reporting and are considering implementing the product. So in terms of the topics, it can be summarized in the following areas: group reporting overview. I'll walk through a data flow and an accounting integration. I looked at multiple consolidation, where you have different groups of consolidation based on the hierarchical structure. And of course, as I mentioned before, just look at key design decisions and lessons learned from my prior implementation. And then finally, we just do a wrap up and have a question and answer session. What is group reporting? From a business perspective, you can look at basically group reporting as a consolidation tool that ensures compliance by adapting regulatory standards based on certain accounting standards or government standards, so to speak. It basically integrates the S/4HANA GL module with real-time data accuracy and transparency, ensuring that the financial reports that you present for those regulatory bodies meet the legal requirement. From a technical perspective or from a system architecture perspective, basically you have your S/4HANA core product, right? And S/4HANA is basically, as you know, is SAP US offering of that basically offers a efficiency of a single table structure where you have pretty much everything at a single table right now. And so what you end up having in S/4HANA, you have the flagship AC Docker, which most of the finance accountants in the industry and even business users are aware of right now. So that's called the AC Docker, and then you have the AC DocQ. So both tables reside in a single structure format within the S/4HANA landscape, and that basically forms the ability to basically ensure that the data is processed efficiently. In addition to the S/4HANA landscape, if you do have SAP systems outside of core S/4HANA, maybe say in ECC or maybe say in another SAP instance, you can basically incorporate that as overall big landscape that would basically allow you to combine the data. And you can do so, import the data, do so directly either through what we call central finance option. If you choose to have central finance, that we pretty much can collect the data from disparate systems. So what this allows us to do is to collect the data into one central repository so you can consolidate. So essentially, in a nutshell, with group reporting, it offers a unification in a single system that basically allows for better continuous accounting and faster analysis, and of course, allow business users to make faster decisions. So what are some of the fundamental concepts around group reporting? Well, before you install and before you implement your consolidation system, you need to have what we call a consolidation reporting data model. And all these data models are essentially, they're basically characteristics or attributes, so to speak, that comes standard delivered with the product. And then you have to activate it. You have to put that in place. It's just like, for example, if you're building a house and you know you get the land, but then you know what? I need to basically we'll come up with a plan. Well, that's what the data model is all about. You need to basically plan, how am I going to design this system based on a pre-delivered set of characteristics or schedules. And some of these characteristics and schedules are, for example, you have your global parameters, which is your reporting event. You have your documents, which basically will be able to track how the data is posted, that come with document types and posting level. And of course, the currencies as well, whether you're going to be in Canadian dollars, US dollars, and so forth. And then you're going to have your organizational objects, such as, okay, what is going to represent my consolidation group? What are my consolidation units? And then your chart of accounts and so forth. Additionally, you can have additional characteristics that are not necessarily core to group reporting, but more part of the finance applications, such as GL accounts, profit center and cost centers, or even profitability objects. Those are other objects or characteristics that you can bring into the group reporting data model. And finally, most importantly, we have what we call virtual characteristics, or calculated at report runtime. That basically means that these are reporting items, and that when you do your elimination, it pretty much does it on the fly. It doesn't post anything in the system. It just basically have the ability to just do elimination on the fly. And that is important because then in prior SAP releases, and even some of the consolidation product out in the system, it basically doesn't do that. You pretty much have to post data. With the in-memory capability of SAP, now you have the ability to create virtual characteristics as opposed to saying creating real data items. With the data model comes what SAP calls master data content. And what these are standard delivered pre-configured system that comes that you can pretty much install on the fly. And you can adopt these master data content based on your requirement. For example, it would come with a chart of accounts. For those who out there in the audience are familiar with model SAP, you know you have the chart, the YCOA. Well, on the group reporting side, you have a chart chart of accounts called Y1 that basically allow you to be able to basically set that up as you configure the system. You also have your balance sheet accounts and then integration with various accounting consolidation transaction types, which I'll delve into further in the session, how you can do this. So essentially, the data model that comes with the system is called scope Y1SG. And with that, once you implement it, you pretty much can start implementing your consolidation. So from a functionality standpoint, as after you set up your data model, another fundamental concept that you need to be familiar with is what's called data monitor functions. And you can think of your data monitor function as basically a cockpit. If you drive in your, if you're in your car and you see your dashboard, or you're in an airplane, there's a cockpit feature of consolidation where you basically have a monitor that can monitor how you post your information. And it comes with basically a set of tasks for collecting and preparing the financially reported data for each of the consolidation units. And it comes with the ability to track all the entries that are posted and specific tasks. For example, you can have tasks that gets basically going to collect your data to validate the data coming in from the S/4HANA GL and prepare your consolidation group changes and so forth. Again, there are standard SAP best practice content delivered that comes with the system that basically you can just pretty much implement on the fly, and you really don't have to do much hardcore configuration. And another feature of the fundamental concept is the consolidation monitor functions. Here, basically, this is where, as a group accountant, you could execute your task, right? So the prior task was more along the lines of data monitor function that the local accountant or the general ledger accountant can basically get all the data ready and be prepared for the group accountant to execute. Here in the consolidation monitor functions, these tasks are basically executed by the group accountant, and they're standard delivered, again, with best practice content. Similar to the data monitor, they come with a set of document types that allow you to track the postings of where these entries are coming from, and allows for you to basically have some traceability and auditability of all the entries. So again, what the SAP Group Reporting is offering the ability to comply and adhere to accounting standard or regulatory standards. Because as you know, as accountants or those in the accounting field, when the accountant comes in, they have to pretty much come in and try to audit your financial statements to ensure that numbers are clean and correct. In terms of the task, one thing I would like to point out in terms of future enhancement, for task 2041, which includes profit and inventory, that task is available of version 2021. And for those who wants to use consolidation of investment automatic functions, pretty much you can either use a rule-based or activity-based for consolidation of investment. You cannot do both. And these are automatic functions that would allow you to basically execute your functions in a streamlined process as you go through your month end. Now let's talk about data flow and accounting integration. So how does consolidation data flows from the GL into the group reporting models? Well, in S/4HANA, as I mentioned to you at the outset, that SAP S/4HANA have this single table concept. You have the AC Docker table, which basically essentially is your universal general table where all your financial entries are posted. And then you have your plan data tables for those who decide or put in plan data in the core S4HANA. So these are two tables that are part of the S4HANA. Now, another single flat table you have is called the AC docu, which is essentially, you can just basically call it the universal consolidation table, where all your consolidation entries are posted. And pretty much that is the Bible for where all your consolidation entries will occur. What happens is when you post data within the S4HANA Finance General Ledger, it flows into AC docu, both for plan data and actual data. If you have companies that are not on SAP, and as I alluded to earlier about if you have a disparate systems, these data basically can flow directly into AC docu if you're not going through the S4 General Ledger. And so in that instances, then you can post directly onto AC docu. So if you have a situation where you have a number of companies, some are on S4 and some are on non-S4, you can pretty much combine them into the consolidation model to get you a fully consolidation for your enterprise. One thing to bear in mind if you do so, if you bring in data in from the non-S4 companies, you're not going to be able to have the drill through capabilities. However, if you do bring the data in from AC Docker or even from AC Doc P, you're going to be able to drill through back from the AC docu table to the AC Doc A table to see how the entries are basically originated. So if you want to do some analysis. So from an accounting integration standpoint, and now I'm going to get a little bit more detail, a little bit more in the weeds in trying to get you to have an understanding from a finance perspective, how does this integration really works? So we can look at it from two perspectives. What we call accounting integration classic and accounting integration with GRPL or group reporting preparation ledger. Depending on the version you're using, it all going to depend on the version you're using. You have to look at it within that lens. So if you're using accounting integration classic, this would be applicable for any S4HANA release from 1809 to 2021 support pack 0. And essentially what the classic means is that the data, when it's posted in Universal Journal, you're not able to see any consolidation specific information or be able to see any consolidation view. Basically, what happened is the data, when it's released from the AC Doc A to AC Doc Q, there's a task which is called data release. It's only going to basically derive the information at that time. And basically, the data is not persisted. The data is basically persisted here at the AC Doc Q area, not at the AC Docker area. So specific information is only available within the AC Doc U in terms of the group reporting fields, right? Contrast that to accounting with integration, group reporting preparation ledger. What you have is a situation where you're going to have the group view at the AC Docker level. So now what SAP has done is, as of release 2021 support pack FSP1 and SAP HANA Cloud 2022, you're now able to see accounting view information at the AC Docker level. When the data is released, it is not necessarily deriving the information per se, but it's basically pulling the data directly from the AC Docker directly into the AC Doc U. That means that basically all the derivation during the posting of accounting journal is no longer needed because everything is already here. Everything is all derived down here as a result of the new concept they called group reporting preparation ledger. And this is massive. This is great because as I'll explain in the further slides, it offers numerous potential capability and use cases where you can really streamline your consolidation process and make it much more faster and much more efficient. So what are some of the concepts around group reporting and preparation ledger? Well, essentially, just to kind of dumb it down for you so you can understand, essentially, you're basically looking at just a ledger, which is basically, say, for example, your leading ledger, right? All you're doing is just creating a preparation ledger off your leading ledger. So for example, you have on the GL side or on the accounting side, where you have your general ledger, which is basically your local accounting principles. And that's where you have your ledger one. So for example, this could be your leading ledger. What SAP has offered now is, okay, fine, in group reporting, you can have a group reporting preparation ledger called ledger 2, and that's basically going to include the accounting side information along with the GL side information. So now you're able to see the consolidation items or attributes and fields all in the group preparation ledger along with your account and ledger information. These combined together would give you what you call the group view, in addition to bringing information in from other modules outside of SAP, as well as running the consolidation task. The reason you can create a group reporting ledger is because the group reporting consolidation fields values are not part of AC DACA. For those in the audience who are technically inclined, if you were to look at AC DACA data dictionary, you'll see that include statement, and that's the reason why now you can basically see both accounting information as well as consolidation information on the AC DACA table. What are some of the benefits of group reporting preparation ledger? It allows for enhanced transparency and tighter integration. It allows for tighter integration with FICO, and accounting entries with group reporting fields can be viewed, for example, with a managed journal entries app. Currently in the S4 environment, there's a standard accounting entries app that you can take a look at. If you were to activate group reporting, based on the releases that I talked about, you would be able to see all these consolidation items here. For example, consolidation FS items, partner unit, chart of accounts, and sub item. These are specific consolidation unit items that are available right in what will be available in the managed group accounting app. Another benefit for this group reporting preparation ledger is going to allow for improved data quality through validation and substitution rules, meaning that you can set up rules that basically can able to validate the data at the time of posting, but at the same point in time would not interfere to your general ledger posting. You can have the ability to preview consolidation information before releasing the information that I talked about previously in the previous slide, how you release the data. So now you can go back and view the data even before you release it. And that, of course, is awesome, because then that can allow you as a group accountant can figure, okay, something didn't post properly. The information that I'm getting right now is not quite correct. So I can make adjustment before you do your final release. And then finally, you can also have what we call flexible logic through derivation rules and mapping rules to meet internal and external reporting requirements. So with the group reporting preparation ledger, there are multiple use cases that you can use it for. Currently, one of the pain points out in the industry within the group reporting implementation of our most group reporting implementation project is basically they're having a hard time getting cash flow statement. Now with GRPL, or group reporting preparation ledger, because of the powerful nature of the configuration capabilities, you could pretty much set up cash flow statements by virtue of using derivation rules with transaction types. You can also have your segment reporting information being passed on or being released over into group reporting through derivation rules. You can also have supplemental information to support financial statement disclosure for those whose companies are in the publics or in the who are publicly traded companies on either the Toronto Stock Exchange or any of the major exchanges across North America. You can able to get additional information to support your 10Q or your quarterly statement. For example, your fixed asset schedule or your amortization schedule. These are schedules that are going to be much more easier now to be able to report on by virtue of the group reporting preparation ledger because of its capability. Another example, what you can use it for reporting alignment or restatement. For example, if you run a report and you change some of your chart of account features or even your cost center reporting hierarchy, if you're moving things around from one hierarchy to another or from one FS item or chart of or one account from one group to another, you can report alignment or restate it. And finally, for S/4HANA on-premises only release, you can transfer corporate-generated fields such as distribution channels, bringing over certain segments such as market or whatever the segments may be based on your internal reporting. Now let's take a look at the consolidation process and how we can streamline this process. From a high-level standpoint, again, as I mentioned, the close process with consolidation can be highly integrated with your local close. You no longer have to wait until you close your books to run your consolidation. It can occur continuously in real-time update, and you can get real-time reported analytics. Basically, your consolidation process can be broken down into just 4 sections: prepare, collect, consolidate, and analyze. When you prepare, you pretty much have to set your global parameters, as I discussed earlier, in terms of how you set up your data model. You set up your master data, ensure your master data is basically up to date, and then you're going to update your foreign exchange rate or any other foreign exchange information. And then finally, and most importantly, if you have intercompany transactions, then you want to go ahead and have your intercompany matching and reconciliation process. Again, you don't have to wait until the last day of the month-end process. You can do that throughout the month-end as well, but you can get a head start, maybe say 5 days or 10 days before the month-end close. When you collect the data, you're pretty much executing a data monitor task. When you consolidate, you're pretty much executing all the consolidation tasks. And then analyze, of course, you're going to basically be looking at the reports using Fiori, the standard Fiori apps, SAC Cloud, or Analysis for Office. One of the items in the preparation phase that I would like to delve into a few more to give you guys some flavor about this is called the intercompany matching and reconciliation process. And I think this is important to note that although it is part of S4 Finance and it's basically a separate module, it is not really mandatory to implement it because it's not really, and it's not a mandatory component of group reporting. However, when activated, it can really assist you in streamlining the consolidation close process. So if your intercompany process is tedious or complex, then I would suggest you consider implementing ICMR because it really comes with some very, very cool features, and it helps basically to ensure that your intercompany accounts are reconciled before you execute your consolidation. Because if you have large amounts of data that can be reconciled in a structured manner, you can pretty much use it to run workflow and do automatic correction posting directly into group reporting. So this is something to consider when you're implementing group reporting, is to consider basically how much of your current intercompany processes you may need to automate using ICMR. One thing to keep in mind, though, is that depending on the nature of your business, this can be a very mini project, a very small mini project in a big project, if you know what I mean. Because it's not as simple as just turning on a button and, hey, we're going to have our intercompany matching processes right now. There's a lot of inputs that goes into it. And so you have to really think about really what your intercompany processes is about, and think about how you want to proceed to automating this process. Again, it's very useful, and it's something that you should consider if you have very tedious or complex intercompany processing. From a high-level perspective, when you're running your intercompany processing, it's basically into four steps. You collect the data, basically real time from the Universal Journal, or if you have non-S4 companies that come to the AC.Q table, it can also read data from other non-SAP system as well. Then once collect the data, you're going to match the documents, and these documents are based on either S4 documents that's coming in or from documents from external system. Then you're going to compare the documents and solve the discrepancies. And then finally, you check your reconciliation balances. Again, this process here doesn't have to be at a month end or static. You can do this throughout the process. So if you have an intercompany processing team, or if you have a lean accounting staff, the accounting department can basically be doing this work throughout the month, so that they don't have to wait until the last day to get their reconciliation balance in place. So from a use case perspective, there are potentially two use cases. One is what we call the local company close, and all that is basically at the general ledger level. So for those who are working in general ledger accounting, you want to reconcile amongst those companies itself, basically where the local company will utilize the ICMR feature to validate and reconcile intercompany transaction on a continuous basis, and then solve any discrepancies. Okay, and then during the month end close, the local accountant can submit reconciliation status result for approval and close the reconciliation period. Again, it depends on how complex and how tedious your process is. You don't necessarily have to do this. If you're a one-man shop, then one person can do this. If you have multiple people within your accounting department, then it can become much more sophisticated. The other use case is what we call the group consolidation close, where this only occurs at the group consolidation level, where the corporate group accountant can utilize ICMR to match document continuously between the consolidation units, and basically do the same thing where you have reconciliation status and make adjustment from a corporate accounting perspective before the data is ready for consolidation. So it all depends on how your consolidation process is set up. If you have a decentralized or centralized consolidation process, then you can use this feature as well. What are some of the key reports for ICMR? You have the reconciliation status balance overview, the reconciliation balances report, and the matching reports. So here you can see the reconciliation status overview report comes with a status that shows, the green will show that, okay, as you go through the month and you're doing a reconciliation, which companies or which combination of companies are in balance and which ones are not. So you do have a status overview report. That's one of the reports you can use. You also have a matching balances report. If you want to get much more detail to match the intercompany balances, you can use this app, basically the reconciliation balances report, that allow you to match each company and with their partner units. And then you have your differences here. So here you can see where the differences are out of balance, and you can take corrective action. And finally, if you want to trace back to the document, you can always go back down to the document and see, okay, fine, which of those documents was posted with incorrect balances, so you can take corrective action as well. So once you finish your intercompany matching and reconciliation, then you can get down into the nuts and bolts of executing the consolidation close. And again, basically, just from a high level perspective, you're going to set your global parameters. You're going to execute the data monitor tasks, then your consolidation task, and then finally, you run your reports either using a Fury embedded report or analysis for Office or any other tool that you may want to use, such as SAC. So the consolidation process from a data monitor perspective, how can you streamline and make the process much more efficient and effective? You can think of it this way. The data monitor task is basically geared towards, say, the local accountant. The local accountant can basically take care of all these data monitor functions, loading the data, running the task in the monitor, executing manual journal entries to make corrections. He can also basically, schedule the task if they want to streamline the process. So you don't necessarily have to sit there and do all these entries manually. You can pretty much turn around, you can pretty much schedule tasks and have them executed so that they be completed in advance before you start looking at your information. For example, one of the tasks I talked about earlier was about how to release the data from the universal journal into the group consolidation table. You could schedule a task for that. And then once you run all the tasks, you pretty much can block it to ensure that the data is safe and secure. So you can really streamline your consolidation process with various techniques by basically running the task successively or scheduling your task overnight and then ensuring that it's blocked once you're completed. The next task you want to execute in the process is basically a consolidation monitor. Again, it's more as I mentioned to you before, you can basically schedule it in the background, or you can basically run it successively. That way we can ensure that the tasks are completed efficiently. And then once you've completed all the tasks, you can block all the tasks and ensure that it's secure to ensure that your consolidation process complied with regulatory standard. In terms of reporting, how do you get reports from consolidation? There are standard Fury reports that comes with the system. However, depending on the release that you're using, some of these reports are no longer available. They are deprecated. So for example, in GR release 2021 and 2022, these stats that I've highlighted, these Fury reports here that I've highlighted, they are no longer available. Anything after basically 2022, you will have to basically use the following Fury app ID if you're going to use standard Fury app. One thing to bear in mind, though, in terms of group reporting or S/4HANA 2023, FSPS1, Support Pack 1, there's a new feature that comes very handy called the Financial Statement Review Booklet. And all that is a package of financial statements, items, a report that comes with standard consolidation balance sheets and various schedules for your management and internal reporting. You can also use Microsoft Analysis for Office as a front-end tool to run your reports. And these reports basically just allow you to access the data real time, basically using the same, which are basically analytical query with the same Fury apps above. And you may want to consider Microsoft Analysis for Office primarily because it offers more flexibility and it's more user-friendly for executing reports than standard delivered Fury reports. It's useful for self-service reports. So if your department doesn't want to rely on the finance department to execute the reports, then Microsoft Analysis for Office would be a good tool to use. Another option you can use to consume consolidation reports would be the SAP Cloud offering for SAC analysis. And this allows basically for you to use dashboards, analytics, and planning. And SAC comes with pre-delivered business content for group reporting. However, this requires a separate license. So that's something to bear in mind. So in summary, if you want to run reports from the consolidation module, you're going to have to use the Fury reports, which are standard, or Microsoft Analysis for Office, or SAC, which is otherwise known as SAP Analytical Cloud. One of the options you can use if you don't want to use the standard reports in group reporting, you can create custom analytical queries to view or basically search for additional information, right? So if you want to basically see where this custom analytical query app is, you just basically click on custom analytical query apps, and to view it, you can put in I-cons or ISCN, and you will see a list of the queries there. And you can edit the query fields if you have authorization. So in other words, you can pretty much build custom reports based on this app. Another topic I would like to go over is if you have a requirement for consolidation, multiple consolidation group with multiple hierarchy structure. So if you have a requirement where you have multiple level ownership structure, where each financial statement is required for each consolidation group as shown, how do you do this? How does SAP or how does group reporting meet this requirement? So for example, so if you have this hierarchy structure where you have multiple consolidation groups, for example, you have SG 3100 and SG 3000, you want to have separate consolidation statements, but at the same point in time, you also want to have a consolidation for this top node as here as well. How do you do this? Well, in the current release of SAP Group Reporting, you cannot do it. It is no longer required to set up multiple level hierarchy structures. So you're going to have to find another way how to do it. The way how to do it is basically, you're going to have to basically set up what we call a flat structure group. And how to do this, I'll offer you a few tips how to do so. So essentially, you're going to have to create a consolidation group flat structure. And the way how to do it is first, you want to create a consolidation group by using the consolidation group create change app. And then you're going to use the manage group structure app. And then once you use that app, then you're going to assign the parent for each of these consolidation units to the respective groups. So in that way, basically, you're going to have a flat structure, and you will end up having something like this. So what you're going to have 4 separate consolidation groups that's going to have to be maintained. So you no longer have to have this complex hierarchical structure and trying to run information all in one swoop. You're going to have to basically have 4 separate different structures. And you do that by using the manage group structure app, either the group view or the unit view. Once the consolidation groups are maintained, what you'll notice 4 consolidation group will appear in the data in the consolidation monitors. So here, for example, you can see within the hierarchical structure where you have each consolidation group appearing separately. And the efficiency of this is that if you have a mixes of various permutations of different consolidation units in the groups, you don't have to basically run the tasks anymore separately for 4 separate tasks in the data monitor. It's all going to be completed automatically. They're going to be, and they will all be completed simultaneously in the data monitor. However, when you go to the consolidation monitor, you're going to have to basically execute those tasks either separately or you can do them collectively. And the reason for that is because from a technical accounting standpoint, each group represents a separate unit. And so the tasks are basically separated based on the consolidation group by virtue of the setup you did it in the managed group structure. So to execute the task all at once, basically we just have to pretty much click on the monitor and then highlight execute all groups and then click update run, and then all the consolidation tasks will be executed. So if you have a requirement where you do have multiple consolidation groups in a hierarchical structure and you have to prepare legal consolidation for each of those groups, you don't have to set them up in a hierarchical structure. You're going to have to set them up as a flat structure and then run them separately, or you can run them simultaneously. And here you can see the tasks are completed, and of course you block it to close down the monitor. Okay, now I'll just basically go through some lessons learned from my prior project. First of all, what you may want to do is, given the new capability of group reporting preparation ledger, you may want to use that to streamline and leverage it to streamline your reporting requirements. Avoid making manual entries in your group reporting where possible. You may want to automate all the elimination entries, including elimination of investment and interest calculation, and perform your ICMR regularly throughout the month. Engage thoroughly with your finance and BI reporting teams to capture integration points and key reporting requirements. And most importantly, and this is what I would encourage most people who are going to implement group reporting, is carefully plan and evaluate your data conversion strategy and cutover task. And you want to consider the following: plan adequate time and resources. Think about how much historical data you want to report on. How much consolidating data is required for production cutover? I would recommend basically using a minimum of 2 months consolidating data in production before you go live. And then also think about that group reporting is part of core finance. So you must coordinate with your FICO team to ensure that your overall data conversion strategy and cutover strategy is successful. So to wrap up quickly, you can find information at these sites that I've included here in the document. And if you need a copy of this presentation document, please email me or email ERP, email me at the email address on the slide below, or send me an email at the following address in the next slide, and I'll send it over information to you. And before I go, just some key take-home points I would like to basically go over. First, think about this: is SAP Group Reporting optimized financial processes by seamlessly integrating with S/4HANA, and it's offered a real-time update and it enhanced transparency. SAP Group Reporting automate the consolidation tasks, and it's basically minimize manual input. It improves accuracy, and it can improve compliance, which basically helps with efficiency and reliability of your financial reporting. Think about the group reporting preparation ledger. You can leverage its features and capabilities to streamline your consolidation process and meet your financial reporting requirements. And finally, when creating multiple level hierarchy structure, you can create separate consolidation group, and you can use the app manage group structure to create illegal consolidation groups. Thank you. And if you have any questions, please let me know. And I'll open up Teams for questions right now.
Awesome. All right, everyone. So down below in that bottom tab, if you have any questions, press the Q&A button, type them, and we will give it a go. For now, we had one come through the session. So Orpheus, regarding ingestion of plan data, how do you propose dealing with more complex data mappings to the consolidation, COA, and other ACDOCU master data with the ACDOCP plan data?
Okay, thank you. So with this, a couple of clarifications first. So with if the question is how do you map plan data to ACDOCU? Is that the question? So if that's the question, couple of things to bear in mind. And it depends on the release of group reporting you're using. If you're on support pack group reporting 2021 FSPS 01 that use group reporting preparation ledger, you would not be able to use the group reporting preparation ledger for mapping plan data. You would have to pretty much basically go through the traditional sense and creating what you call a plan version, and then basically use that plan version as a way of getting the data in. So you're not able to map it directly using GRPL. In the case of releases prior to 2021 FPS 1, it would basically be just using the chart of accounts that you map to your the GL chart of accounts that you map to your consolidation chart of accounts. That will bring the information in based on the version. So from a planning perspective, nothing's really changed in terms of mapping the data for any group reporting releases. It's still the same. It's just that bear in mind, you're not going to be able to do it with the group preparation ledger. You will not be able to do plan data mapping with your group preparation ledger. You can only do it to the traditional sense, to the classic sense. I hope I answered this question thoroughly for him. If not, you can ask him to reach out to me directly and I can explain further. I know we don't have much time left over, so.
And we had another one come through. So is GRDC based on BTP?
Is GRDC group reporting based on, what was it based on? What?
BTP.
No, it's not. No, it's not necessarily based on BTP, but it's part of BTP. It's not necessarily based on BTP. It's part of it. Because prior to BTP, GRDC was there. So with BTP now, everything is all incorporated into one. But if you have BTP automatically, it's going to come as a package, yes.
Nice. Okay. And so how can group reporting consolidate a plan or forecast data from SAC planning?
Well, two ways you can do that. If you push your data, you can pull it directly from SAC planning, much like as I mentioned to you before, data comes into group reporting directly to the ACDOCU table. That's one option. I think there's, based on the release, there's a direct connection now where you can pull the data directly from SAC planning. And then the other option is if you push your plan data back into core S4, you can pull it in from ACDOCP. So it all depends on your requirement and how they want to basically attack their planning and forecasting reporting requirements.
Nice. Okay. And so last one is what are the SAP reporting tools used to consume and consolidate data? Consolidated can be consumed by, and what would you answer that?
Repeat that question again, please.
Yeah. What are the SAP reporting tools used to consume consolidated data?
Okay, so there's two options. There's a couple of options. You can use the standard Fury embedded analytics reports. That's one option, or you can use what we call SAP Analysis for Office, or the other option is to use SAC. Those are the three options.
Nice. Yeah, does anybody have any last minute questions? Feel free to drop them in now. Okay. Yeah, that's everyone. So thank you, Orpheus.
Thank you, Robbie. Any more questions?
Yeah, none at the moment, but if there's any last minute questions, tag us on LinkedIn. I attached the contact form in here, so feel free to reach out and we're happy to give you an answer.
Thank you, everyone, and thank you for attending.
Of course. Have a great one.
Thank you. Bye-bye.
Bye.